to Mullen Associates, and really appreciate everybody from HAR 290 participating today. We'll go ahead and start by introducing ourselves. My name is Kevin Mullen of Mullen Associates. I'm the advisory services manager here, which means I manage all of our tax advisors. I've worked here since I was about 10 years old. My first job at Mullen Associates was shredding paperwork and washing the dishes and cleaning toilets, and so not a whole lot of 35-year-olds can say they have 25 years of experience, but I've worked here for a long time alongside this wonderful, awesome guy here.
I'm Ward Mullen, and my wife and I started Mullen Associates back in about 1980. We started doing some tax returns, and it just grew and grew and grew and grew to the point now where we have our own building and about 15 employees.
All right, so we'll go ahead and jump in. Today we're going to be talking about the resources available to you as realtors and working in the real estate industry that the government has made available through all the kind of the pandemic that's going on right now. First, we'll go ahead and jump in, and we want to thank our leadership team, the HAR 290 group, for inviting us to speak with you guys today. Specifically, Marie Sandoval joined our webinar last week on Wednesday. We're going to be covering a lot of what we covered then, but this time more specific to you and what you do. Speaking to that, at Mullen Associates, we work primarily, our target market is through small businesses and self-employed individuals. And so you guys are right in our target market. We've completed thousands of realtor tax returns. We have a realtor checklist that we have designed specifically for folks in your industry. So we're real familiar with what you have going on. So we hope you hit us with some good questions today, because we'll be prepared to answer them. Before we move forward, we want to thank our sponsors, those who kind of keep your lights on. We want to thank Bridgeland, Frontier Title, Next Listing, Cypress Insurance, Texas Bay Credit Union, Super Home Warranty, and Red Star Inspections. Thank you so much for making it possible for us to speak with you guys today. Before we jump into the actual content, first I want to speak to us as a firm, Mullen Associates, who we are and how we do business, so you get an idea of what we're like. So obviously we're a family company, but we hire folks who are really good at communicating and educating, because to us, making sure that you have all of the right information to make the right decisions for you is important to us. And so when I go through the hiring process of bringing on new tax advisors, it's one of the key things that I'm looking for. In the industry that you're in, you know how important customer service is, and of course we take that real seriously. So what you're seeing here is just a graphic showing kind of our business model for mastery. And so we believe at Mullen Associates that there are two primary facets to growing your business, financially speaking. So of course that's what we do, right? We're numbers people. And so specifically in regards to your finances, we believe that there are the models that help sustain your business, and then the ones which grow your business. And the sustaining part, the kind of the analyzing and the complying to your federal filing requirements and all of that, of course, you have to make sure and do those things. You got to keep decent records, because no one likes paying that ridiculous self-employment tax. And so we got to write off as many expenses as we can to help bring your income down. And so all of those are really important, but you just need those to just sustain your business financially. At Mullen Associates, we do those things, and we do them incredibly well. But beyond that, there is the growth part of your business, and that comes down to forecasting your numbers, not just planning a year behind, but a year in advance, 2-3 years in advance, really looking at what your financial goals are for your business and making sure that you're hitting your numbers. And then beyond that, we start talking about tools like this, which come out of nowhere. You got to have somebody that you trust, somebody that you have a rapport with, somebody that you've worked with, so that you know that that information is good. And so we hope that that's what you get from us today. Okay, so the CARES Act was passed on March the 27th. Things have changed dramatically even just since then. these things really are being updated every day. And so we'll be going through some of that, of course, with you today. The other point that I wanted to make sure that all of you understood, being that it's so close to what we are used to being the April 15th deadline, it's important that you understand that that deadline was extended. So not extended in the sense that the federal government filed an extension for you, like some of you may have done in the past. But the actual deadline itself was just moved from April the 15th to July the 15th. This means that your filing deadline is July the 15th. It also means that your paying deadline is July the 15th. It's important to note that if any of you are making estimated quarterly payments, you do still want to make your April 15th quarterly payment if you are if you're submitting any of those. Obviously, I know all of you guys are self-employed, and so some of you are making those payments. If you aren't and you're interested in it, we can advise you on that as well. And the other piece that I'll mention is please ask questions. You go ahead and include them in the chat. We have somebody monitoring that, so we won't answer them dynamically as we go, but we will have a Q&A section at the end. So we will make sure to get to all of your questions. If for whatever reason our answer is not satisfactory, we will provide information that you can reach out to us directly, and we're happy to work with you on a one-on-one basis, especially because a public environment like this, dealing with a sensitive topic like your finances, we want to make sure and give you the privacy that you need as well. So if you have a question, please let us know. We're happy to answer it. Looking at our agenda today and what you can expect from us within the next 40 to 50 minutes or so. First, we're going to go over what the Paycheck Protection Program is. And you're going to want to pay real close attention when we're speaking to that in particular as kind of an income replacement during this period of time in which you're not earning what you may expect to earn. Next, we will talk about what the EIDL loan, the Economic Injury Disaster Loan, is. So Ward's going to go ahead and go over that one, and then he's going to speak to the difference between those two programs because you may have been reading or hearing about some of this stuff. They are applicable to independent contractors and self-employed folks. So you're going to want to pay close attention because it can impact your finances directly. Then we'll go over the stimulus package relief. Basically, is something that each of you may be receiving. It really is specific to your adjusted gross income and your tax situation. And so it'll be a little difficult for us to answer any questions like, will I get it? We're happy to answer that, but that needs to be done on a one-on-one basis. For now, we're just going to go over kind of what the stimulus package relief is and under what certain circumstances you may be receiving it. Okay. And then lastly, of course, we'll have our Q&A section. So please ask some good questions. We're happy to answer. We will get those read off to us, and then we'll just kind of answer it in a discussion format. Okay. So why don't we go ahead and move on to our first piece of business, which is the Paycheck Protection Program. So I'll be speaking to this specifically. First, I'm going to tell you a little bit about what it is. The whole purpose of the Paycheck Protection Program is the federal government wants people to continue to pay their employees. This is just economic relief during this kind of time in which our economy has grinded to a halt mostly. Obviously, there are some industries that are busier than ever, but real estate is not one of those industries. Taxes, from our perspective, this is usually our busiest time of the year, but it's busier now for other reasons than what we would be used to it being, right? The passage of the new bill and going through all of that, 800 plus pages, and then all of the guidelines. You know, the SBA dropped 41 pages of regulations onto the banks on April the 3rd, just early that morning. And so some banks just, Chase, for example, came out and said, we're not issuing any of these loans today because they had to put those 41 pages into effect. They had to figure out what they meant and all that kind of stuff. And so it's a very fluid situation. And so even if you read things that are a week old, that could be outdated information. So keep that in mind. But the Paycheck Protection Program specifically is the federal government trying to make sure that employees are still paid. It's funded to about $349 billion. It started on April the 3rd, but that was for entities and businesses. For independent contractors and self-employed folks, that starts on April the 10th. So today is the 8th. That means it's just a couple of days now before you may be able to apply for this loan. Now, the intent behind the loan is to cover payroll costs, but basically we'll talk about who qualifies. It's small businesses with less than 500 employees and self-employed folks. So even if you are just a one-person shop, or you're paying a desk fee to work at a broker, you would still potentially qualify for this loan. I say loan, and we'll get to kind of what those terms mean here in a second. First, let's talk about what are covered costs. So the bill talks about what covered costs are, because a portion of this loan may be forgivable. Okay, so it may not just be a loan in the traditional sense, but it may just be an economic stimulus, we'll call it, but a benefit and an income replacement for you during a period of time in which it's difficult to make a sale. Okay, so what the PPP covers, it talks about payroll. Now, the bill actually goes into specifics of what that payroll is, and so I'll speak to that in a second, but first, it covers payroll. And so for your purposes, that kind of means an income replacement. Unless some of you have employees that you're actually paying to work with you or for you. Some of my realtors pay people contract, right, 1099, to do some work for them. I personally don't have any realtors that have employees, but some of you may, and if you do, of course, we can go into that in particular. But the PPP covers payroll. Now, payroll means salary, wages, commissions, tips, net earnings. That's a really important one in the bill for you, is net earnings. We're still trying to determine, based on what the lenders require, of what those net earnings are. Is it your gross income minus your cost of goods sold? Or is it the bottom line of your Schedule C on your tax return, which is just the profit from what you're doing? Obviously, you got a lot of expenses, closing gifts and miles, and super key, and all those types of different business expenses that we get to write off. We don't know which one it is for, so we are still currently working with lenders. But keep in mind, lenders aren't even opening this for independent contractors until this Friday. So we're still trying to figure this stuff out as we go here. So that covers kind of those payroll costs. Then beyond that is employee benefits like health insurance and sick leave and that kind of stuff. Not super applicable for you guys. And then state and local taxes and payroll expenses. But again, not a lot of that's real applicable for you. The one I want you focused on is net earnings. Okay. The second thing that we're looking at is mortgage interest. Now, this really is for commercial mortgages, which, if you guys are paying a desk fee, generally you don't have. Same as rent. Rent is covered here, but unless you're actually renting out an office, again, if you're paying a desk fee at a broker, then that's not going to qualify. And then the final one really is utilities. So again, if you have commercial real estate that you are renting in order to operate your business, some of these may apply and may help you. Now, it's important to note that all of these sound good, but there is a cap. Okay, there are two caps I want to speak to specifically. The first and the most important one is that this is capped at $100,000 not supposed to be touching my face. Sorry about that. But it's capped at $100,000 per employee, and that's in an annualized capacity. Now, I say annualized because the way the calculation works is we take $100,000 per employee, and you could have $200,000 of revenue in your work, but we got to cap that at $100,000. So that's going to limit us a little bit. But the way the calculation works is we take it at a max of $100,000 per employee. And then we take your average monthly payroll. So if you are a sole proprietor, independent contractor, it's only you. and you're earning $150,000 in your real estate sales, then we're going to cap that at 100, and we're going to divide that by 12, okay? And that gets us to your average monthly revenue, and then we multiply that by 2.5 times, basically 250% of that number, to arrive at the amount of loan that you could potentially qualify for. So at $100,000, that 2.5 times multiplier is about $37.5, I believe $37.5 thousand is that number. And so if you're over 100, that's kind of the number that you're looking at. If you're under 100, then you got to divide it by 12, multiply it by 2.5 to arrive at the maximum potential loan that you could qualify for. Now, assuming you qualify for that $37.5 thousand, then we take that and we use that as an income replacement. So when I say payroll, I don't mean you got to now turn around and pay employees. If you don't have any employees, no problem. If this covers your net earnings, right, and it covers that income replacement for you, then it is qualified. It's a covered cost. So then what happens with that money is it replaces what income you would have had coming in, and you're done. It's a covered cost, and that loan can be forgiven, meaning it just is a buoy to your finances from the federal government. It's not something that you pay back. Now, let's assume that you use that money for those expenses, but some of it is not forgivable, which there are only some certain circumstances in which that can happen. If you use that money for mortgage interest, rent, or utilities, that portion of the money that you use can only be 25% used for mortgage interest, rent, and utilities. 75% has to be used as an income replacement or payroll if you actually have employees, okay? And so if those numbers are off, it doesn't mean that you've committed fraud or anything like that. If you don't use the money for any of these things, that is fraud, and the federal government will pursue criminal action, okay? So it's important that you understand that this money needs to be well accounted for, okay? And we'll go into some of those strategies here in a second. But as far as using this money, if you use more than 25% of it for mortgage interest, utilities, or rent, then some of that you may have to pay back. The interest rate very recently was basically capped. Initially in the bill it says not to exceed 4%, but now the SBA is saying 0.5%, and that's it. That's the interest is 0.5%. So even if you use some of this money for or in a way that's weighted against what you should be, and you have to pay some of it back, the interest rate is not significant, and payments don't start for the next 6 months. And so you've got a lot of flexibility here. The last piece that I will speak to is kind of the accounting aspect of receiving this money. If you receive this money, generally my recommendation is that this money goes into a separate account than kind of your business operating account. You want to be real careful with how you use this money. Make sure that it pays you during that period of time. The covered time or the covered period that the bill talks about is February the 15th to June the 30th. So that's that period of time in which you use that those PPP funds as an income replacement. So that should kind of give you the general gist of the PPP loan. I'm going to give Ward the opportunity here in a second to talk about the economic injury disaster loan. It's a little different, but if you have questions about the PPP loan, I hope you go ahead and type them into the chat now so that we can address them while it's fresh on your mind. But for now, I'm going to pass the ball to Ward. He's going to
Thank you,
dazzle you.
Excellent job. The key in the EIDL, which is the economic injury disability loan, disaster loan, I'm sorry, is that obviously the area we're in is in a disaster situation. It may not look like hurricanes out there. Some of you have been down that road, but because of the virus, it's considered a disaster area. The economy is showing that. Now, the EIDL loans are not as well documented at this point as PPP, because the PPP is a major concern. The government is very concerned to make sure that payroll, people are kept on payrolls as much as possible, and that they just as soon pay you to continue to employ your people and to continue you being able to do what you do as have you go on unemployment. Because one way or the other, the government's going to be paying out money. Now, the idea behind the EIDL loan is it's up to $2 million, and it covers the expenses caused by COVID-19 that are not directly economy related. So if the economy went down, now this isn't a problem for you guys because the economy in Houston is very, very good. But there might be parts of the country where the economy is just down and real estate is having a problem. But it's designed to cover expenses that are caused by the virus out there. You're having problems showing homes, no question about it. You're having problems selling homes. People are reticent to go out and really seriously look either to buy or to sell at this point because they're staying home. So your industry, your business, your livelihood has changed tremendously. Now, Kevin mentioned this, and it's very true in relation to the PPP. The first 6 months of any loan payments, interest, principal, etc., are going to be covered by the SBA. And that 6 months begins when the law was put in place, was signed. One other advantage in the EIDL for all people, and it certainly would suggest that you need to file for it, is that there is a grant available. And that grant is up to $10,000 that is basically free money. Now, when I mention this as free money, it's important because, again, these things are changing daily, as Kevin had mentioned. They've now made it very clear that the money that you get from this grant will be deducted from the total amount that's free from the PPP loan. So that is something that needs to be looked at. We start looking at, how much money you're going to pay back, how much of it you will never pay back. So you need to look at that. We would certainly be happy to sit down with you at that point if you have questions. You need some guidance on best way to handle this and what economically is going to hit you.
Yeah, you really don't want to try navigating these waters on your own. There's a lot of potential issues that you can run into.
Now, the intent we said for the EIDL is to cover expenses that you normally would cover, but because of the COVID-19, you really can't. So one of the important things that you want to do is look at where you were in 2019. In 2019, if you brought in, let's say, $200,000 in income, and there's no reason to think that 2020 wouldn't be as good a year for you, you need to use that as your basis. And so you need to try and do a calculation of basically, where was I? Where am I now? How much of an impact has the virus caused in me? Now, as Kevin mentioned, this stuff is very available, certainly to small businesses, up to 500 employees, but it's just as available to sole proprietors, independent contractors, etc. Anybody who is in business, either for themselves or has a business that they run, is available for this kind of money. And it can be used for payroll. One of the keys here, and we'll kind of touch on this, is we can't really double dip in any way. So the expenses that you use on your PPP cannot be used in justifying the expenses for your EIDL loan. But the PPP covers basically 8 weeks of salary, as well as the, 2.5 months. I say 8 weeks, 2.5 months of salary, as well as mortgage interest and utilities, etc. You and I are going to be impacted by the virus for a lot longer than 2.5 months. We've already been impacted for almost 2.5 months at this point because it basically began February 15th. So the income, if you're a business owner, payroll after that 2.5 month period is you could take into consideration here. Any debt that you have that you're trying to pay, accounts payable in any way, shape, or form, any other expenses, basically, that just can't be paid because of the COVID-19 situation. The interest rate on the EIDL loans is 3.5%, and the payback period can be up to 30 years. One of the keys here, as far as EIDL is concerned, is you need to file. There's no, it doesn't have to be done today, but you do need to file for it for two reasons. First of all, you want to get that grant. If there's free money out there and you need some assistance, and all of us do, in getting through these tough times, you want to file so that you can get the grant. Second of all, once your loan is approved, that doesn't mean you have to take it at this point. You can determine how much and when you're going to take it, which will impact certainly the repayment, etc. But none of the EIDL is forgivable. We talked about the grant money that is forgivable. You'll never have to repay it. But the loan itself, once you actually take out the money in your loan, none of that is forgivable, unlike the PPP that Kevin has talked about. Now, in determining how much you're going to get, the SBA is going to look at your credit history, your repayment, and your eligibility. Again, they're not going to take into consideration if the economy has turned down for any other reason other than because of the virus, COVID-19. Potential collateral is extremely important. The Small Business Administration has put a limit of $25,000 on uncollateralized or unsecured loans. So if you have any type of real estate, anything that you can use to clearly collateralize the loan, you want to make sure that that is stated on your application. So the SBA can honestly give you as much money as you are due in trying to stay afloat.
Now, Ward, real quick, could you describe the difference between the $10,000 grant and the actual EIDL loan itself again?
Theoretically, we don't know exactly how the Small Business Administration is going to determine how much you get. The concept is we're going to give you up to $10,000, and it's supposed to happen within 3 days of actually filing your application for the EIDL. That may be 3 days, maybe a little quick. We'll see how quickly it actually happens. But that amount that you get there, what is forgiven, will also impact the amount of your PPP that is forgiven. So if your PPP was $37,000 and you already get $7,000 from your grant, you would end up with $30,000 of potential forgivable money when it's all said and done. But as Kevin has indicated, that additional $7,000 now, which would not be forgiven, is going to be at a 0.5% APR. So that's other than stealing money, you can't get it much cheaper than 0.5%.
So that $10,000 grant, that's the grant.
Right.
The rest of the EIDL loan is a loan, and that's the differentiation.
Exactly.
Okay, thanks.
And that loan, I think we mentioned it, is maxed out at $2 million. I would be surprised if any of you really get to that point. If so, you must be selling homes in River Oaks and making a gazillion dollars, which I hope you are. That is wonderful. I think that probably covers the main items on the idle. Just looking at, again, kind of the difference between the two of them. The PPP covers salary and anything related directly to salary. It covers mortgage interest, it covers rent, and it covers utilities. Idle covers anything else, basically, that relates to your business that the PPP does not cover. So it covers salary beyond that 2.5 months. It covers rent, utilities beyond that 2.5 month period, and it covers any other expense that you have. So we're talking about your hard dues, all the different things like that are expenses that you have in real estate, mileage, et cetera, et cetera. All this is going to be covered by that idle loan. The PPP maxes out at 2.5 times the average monthly expenditures you would have. They're covered by the PPP. The idle maxes out at $2 million. The PPP interest rate on items not forgiven is 0.5%. On the idle, it's 3.75%, which again, for you, those of you who've been selling homes, realize getting a mortgage for 3.75% many times over the last 5 years has been impossible. There have been sometimes when it's been that good, but that is an extremely good interest rate. The PPP loan has to be paid off within 2 years. On the idle, you have 30 years to pay it. I guess the other real difference is the PPP can be forgiven in totality based on if you're able to substantiate everything you've done and in relation to the grant that we talked about, whereas the idle is not a forgivable situation.
Now, Ward, tell me about the difference in how you apply for the idle loan versus the PPP loan.
The PPP loan is very simple to apply for. 2 pages. The idle loan has been more difficult. They're making it simpler as time goes by. If any of you applied for the idle loan a week and a half ago, when it very first became available, it was pretty comprehensive. They came back and said, no, we don't need all this information. And they made it a much simpler application process. It's about a page and a half at this point.
Now, where we apply for the idle loan is through the SBA itself, sba.gov. We'll lead you there pretty quickly. And so that's done through the SBA itself. However, and obviously that's government backed. However, the payroll protection program loans are not done through the SBA. Those are actually done through private companies, through lenders. Okay, and so you want to talk probably first who your lender is. I've seen some of these requirements from the banks. Most of them require that you have a business account open with them already. And so I've looked at I think Community Bank of Texas. I've got their list of the things that are required. We've seen Amegy's requirements. I've seen Chase's requirements. For those of you who bank with Wells Fargo, they have shut down receiving more applications for these loans. They're not taking any more. There's some interesting stuff going on with the banking industry and the federal government right now, because 0.5% that they're collecting in interest is not much. The closing costs and that kind of stuff. The banks are trying to figure out how to make this profitable, and so there's some friction going on right now. Also, the federal government is giving them 41 pages of regulations the morning of accepting these applications. So you can appreciate that as professionals, really difficult to try and make something work right then.
If how you are governed changed day by day, and I don't mean a little half page, like Kevin said, 41 pages are dropped into your lap, and you're supposed to start something that day, you probably would go, whoa, well, we need to make sure that I clearly understand and find the best way handle this before you do it. As Kevin said, Wells Fargo has closed down things at this point. Many of the banks, even when they have started, have then closed for a period of time while they reevaluate. So be patient. The banks, in most cases, are doing the best they can. And we talked about banks, savings and loans, credit unions. There's a lot of people out there who are willing to help with these things. We just need to be patient with them. In the same sense, we're hoping they're patient with us and helping us in getting everything properly filed.
Yep. So make sure first you check with your current lender. It's the first thing, unless you're with Wells Fargo, the first thing you want to check is your current lender because, again, many of these requirements are that you have an account currently, a business account currently with them. One other thing I think we didn't mention is it is important that if you are a brand new realtor to the HAR 290 group or just a brand new realtor just in general, if you just started your career in real estate, then you did have to be in business. I think the PPP is February 1st.
Yes.
If I remember right.
Yes.
Is the EIDL the same?
Yes.
Okay. And so if you just within the last month or two started, you may be limited in what you can benefit from here. Okay.
Just a comment in relation to that. Even if you started your business, normally for the PPP, they're going to want to look at the past 12 months to see what kind of salaries you're looking at or net income, et cetera. If you started your business November 1st, for example, you're not going to have 12 months of history that you can use to validate how much you're asking for. So what they're suggesting is use what you've got, look at it from an average monthly perspective. They understand if there are businesses that began January 15th that are just dying at this point. They don't have a lot of history, but they're very concerned about trying to maintain them, continue their existence. They hate to see businesses totally go under because we all know this is going to come back. So it's not a matter of, the whole society has changed. It's a matter of we just need time to stay afloat until we can find answers to the virus and get the economy back on its feet.
All right, so that covers us for the PPP and the EIDL loans. Again, PPP is a loan, but can be completely forgiven in most cases based on what it is that you do in particular. As long as we are true and accurate on the application, it based on your circumstances ought to be forgiven in most cases. The EIDL loan has the grant, and that portion is not a portion of the loan, but it's a grant. The loan has to be paid back. So those are the most important identifiers between the two of them. You just generally could qualify for more on the EIDL loan than you could on the PPP loan. So it just depends on how much capital you need now versus having to pay it back. Okay. So let's set those aside for a moment, and we will still in the Q&A section go back and answer any questions relating to those. I'm keeping track here of some of those questions and see some good ones. So happy to answer them. But now let's shift our focus a little bit, still through the economic relief kind of side of things. But now we'll start talking about the stimulus package that's coming in here pretty soon. In fact, real soon. The Treasury Secretary Mnuchin said, I think it was Wednesday or Thursday of last week. Said that he guaranteed, now it's a government official, so keep that in mind, but he guaranteed that these were going to go out in the next 2 weeks, okay? So first, let's talk about who gets it, okay? So the number that you'll see in the media, the number that you may keep on seeing is $75,000. It's important to note that that's adjusted gross income. So I'm going to speak specifically to realtors for a moment, right? Which hopefully all of you are. Your adjusted gross income is a number that's determined after a couple of things. So let's just assume for a moment that you are single, okay? And you earned $110,000 of gross revenue in your business. The thing is deductions for a self-employed individual are taken off the top. That means it helps reduce your income right out the gate. And so that adjusted gross income number is after your deductions. Now, someone like me, I'm an employee at Mullen Associates. Any deductions I have come after my adjusted gross income. But you actually get these deductions right off the top. So that's the silver lining to self-employed income. Of course, you know the reality of self-employed income is you deal with that ugly self-employment tax, that 15% self-employment tax. That's not fun to pay. But the silver lining is you get your deductions off the top. So let's say as a single realtor earning $110,000, and now we come in and we've got $40,000 worth of expenses. Okay, so we get you under that $75,000. You would qualify for the $1,200 stimulus relief payment. It's $1,200 per adult. Now, some of you are married. In that scenario, you could potentially qualify for $1,200 for yourself and $1,200 for your spouse. However, we're not looking at a $75,000 adjusted gross income figure at that point. We're looking at $150,000 of adjusted gross income. Okay, so that's kind of that threshold is 150. So if you're under 150, you get the full stimulus payment. We can be like Solomon and split the baby here for a minute. Because there is a head of household filing status, of course. If you have a qualifying child, but you are not married, then that threshold is $112,500. All right. Now I've told you the three thresholds: $75,000 for single, $112,500 for head of household, and $150,000 for married. If you are under those thresholds, you will receive the stimulus payment. However, if you are over those thresholds, you may still qualify for a partial payment. So as a married filing joint realtor earning $155,000 a year, right? Meaning adjusted gross income of $155,000. So that's your income, that's your spouse's income, it's everything all together. You would qualify for a large portion of the $2,400 between you and your spouse combined. Maybe only a couple of $100 of that you wouldn't receive. Okay. Now let's speak to those who have children, because those children under the age of 17, it's important to note, under the age of 17, you'll get $500 per kiddo. I have an 11-year-old, an 8-year-old, and a 1-year-old. So that's $500 for each of those kiddos. And so in that scenario, if you've got kids, then you could get some extra relief there. Now, for those kiddos who are 17 plus, you will not receive the $500 stimulus, but more importantly, they will not receive a $1,200 stimulus as an adult. They won't, if you claim them on your tax return. This is probably the question I get asked the absolute most. I have a college student, I claim them, I claim their tuition, I claim all that stuff. Will they get anything? The quick answer is no. If you claim them as a dependent, then your child, that adult child, or we'll call them quasi-adult children, won't get that stimulus payment. Okay, I'm happy to kind of give you information on a one-on-one basis. It's really impossible for me just right now to describe all the situations in which you may or you may not receive that stimulus payment.
I think, Kevin, one thing that probably needs to be said at this point, because it is a hard $75,000. It depends to a great extent for people who are self-employed on how their tax return has been prepared. I saw one I looked at yesterday where an individual had $45,000 worth of gross income and not one penny written off in expenses. So a lot of this depends on how well that return has been prepared. So if you've got, if you made a considerable amount of money in 18 or 19, and you're not sure that you've really done, your tax return was prepared in a very assertive way. I won't say very aggressive way, but a very assertive way. We would be more than happy to sit down. Well, I say sit down with you. We're not going to sit down with you at this point, but help you to evaluate whether or not there are legitimate, I emphasize legitimate expenses that weren't taken on the tax return. So if you were looking at maybe $80,000 in AGI at this point, there's a reasonable chance that there are, again, legitimate expenses that weren't taken off your tax return that might help you to stay at or under that $75,000 AGI number.
Yeah, that's a great point, Ward. Thank you. There are some of you who have filed your 2018 tax return. I hope every single one of you has. If you haven't, give us a call, let us know. We specialize in realtors. We're happy to help you. But let's assume for a moment that all of you have filed your 2018 tax return. Some of you have not yet filed 2019. Again, shameless plug, we're happy to help you. But if you have filed 2018, but you have not filed 2019, the stimulus relief payment is being based on, first, your 2019 tax return. But if you have not filed that, they will base it off of your 2018 tax return. So if you have not yet filed, this is not a rush to try and file as quickly as possible to make sure that you get this money, okay? So they will look at your 2018 tax return. Now, if you received a refund on the 2018 tax return, and if that refund was direct deposited into your bank account, and same thing for 2019, of course, because they're going to go off of 2019's first. If 2019 or 2018, whichever is the most recent return you filed, were if you received a refund on those, and those refunds were direct deposited in your bank account, then you will be in the first wave of these stimulus payments. So those are going to come again. I mean, Manoush said in the next 2 weeks, and that was half a week ago. So a week and a half from now, theoretically, you will get that money. Again, as soon as you received a refund and that refund was direct deposited. If you did not receive a refund and nothing was direct deposited into your bank account, it may be that the federal government will not send you that check directly into your bank account. I'm sorry, they may not send the money directly into your bank account. They rather will mail you a check. Now, it's also important to note that if you have not filed 2018 or 2019, neither of them, then upon filing your 2019 tax return, that will trigger the sending of the stimulus payment, okay? And so this is not just a one-time hit or miss scenario. This is going to be paid out over the entire course of this year. In fact, if for whatever reason you do not receive the stimulus payment between now and when you file your 2020 tax return, this stimulus payment is really a prepayment of a credit that would be applied to your 2020 return, which means if you don't receive it in 2020, when we complete your 2020 tax return, you would receive it at that point. That brings me to one other piece, which is, let's say your 2018 tax return as a married filing joint filer has an adjusted gross income of $149,000, okay? But your 2019 tax return, of which you have yet to file, it's not filed, okay, has adjusted gross income of $170,000 on it. Well, you would qualify for the full stimulus payment on your 2018 tax return, and you haven't filed 19 yet to tell them that they shouldn't send you the whole thing. Then what will happen is they'll send you the whole thing, and when we complete the 2020 tax return, we will have to reconcile that credit, which means some of that would have to be paid back.
One other thing, Kevin, and I wouldn't expect this to impact any of you directly, but it may impact your parents, for example, is if they are not filing a tax return because all they're getting, for example, is Social Security. The SBA, or actually IRS through Social Security Administration, will pull up that information and send out checks to people who do not file a tax return because they don't have to. They don't have any real taxable income to report. So if you have that question, if you have parents or brothers and sisters or anybody else who falls in that category, they are still going to get the stimulus check. It may be a little longer because they've got a lot of records to go through to find out who falls in that category.
Okay. The last thing that I will give you is in regards to the stimulus checks is the question of, is it taxable? It's not. This is not income to you. You're not going to pay taxes on receiving the stimulus check. For what it's worth, That same thing applies to the PPP and EIDL loans. The grant of the $10,000 on the EIDL loan is not taxable income. The forgiven loan through the PPP is not taxable either. There's a lot of pieces of tax code that talk about canceled debt, and that ends up being taxable income to you. The PPP is not going to fall under that. So we have confirmation that that will not be taxable even if it's forgiven. Okay. So hopefully I've given you some examples and some idea of whether or not you will qualify for the stimulus relief payment. The reality is if you want something that's personal to you and to know whether you will get it or not, we're happy to answer that question. We just need information from you, and just give us a call. Okay. So that covers kind of the three primary points that we wanted to talk about today. I hope some of that information was helpful to you. I know we've had some great questions that have been asked at this point. I hope your brains are still, those gears are still turning, because go ahead and type those out and we'll capture them. But I think Clark Boyd, our general manager, is going to read off to us a couple of these questions. So Clark, I think we're ready when you are.
Okay. I'm going to go in reverse order just so we can stay on the topic of the stimulus checks, and I'll go through each one of those that came through.
Sure.
So the first one is, my son turned 17 on April 16th of 2020. Will I still qualify for the $500?
Yeah, great question. My understanding is that yes, they're basing this off of the 2019 tax return. Now, I don't know how that's going to reconcile on the 2020 tax return because, of course, your son would be 17 in 2020. But my understanding is they're basing this off of the 2019 information.
But it's going to be somewhat challenging potentially is your son was 16 in 2018. So he would qualify if they just look at the 2018 return. But when 2019 comes around, he is going to be 17, and so he would not qualify.
To clarify, the individual saying that he turned 17 in April of this year.
No, I know. I'm just trying to help them understand.
Oh, I'm sorry.
Situation
Yeah.
Where someone, you look at it and say, oh, my son was qualified in 2018. But in 2019, which is where they really want to base this, he wouldn't.
Yeah. Good point.
Okay, next question. If I currently use Wells Fargo, who should I go to? Do you have a list of banks that I can access?
So there are a bunch of lenders. So I mentioned a few: Community Bank, Amegy, Bank of America, Chase. So that's a couple off the top of my head. I'm sure there are more lenders doing this. Clark, I think that maybe you have some information in regards to some specific lenders who are doing this. I don't mean to burst your bubble by telling you that Wells Fargo kind of capped these out. They took about $10 billion worth of loans and just said, we're done. But again, as I mentioned before, 2 of these banks so far have said that they require you to have a business account with them for these business loans. And so this may mean that you need to make a change in who your business account is banking with in order to get this. And I think that that's a fair move as your current lender is not willing to service you in the way that you need.
That's a good point, Kevin, because if the banks that you're using right now is not helping you to succeed in your business, then it's smart to look around to find another bank who will be there for you. That's what we all look for. I mean, people look for you as a realtor because they trust you and they believe that you're going to do the best good for them. The same really needs to be true about the bank that you use. In relation to this, I was reading last night, the SBA is going to pay the banks 5% on the loans that they do. So if they do the $10 billion, I think it's a number we're throwing around, $10 billion, that means that $500 million is the fee that they're going to get through doing that. So it's not that these loans are not real good from a interest perspective to the banks, but there's a lot of money available to the banks. So there are people out there, there are companies, banks out there who should be willing to help you to get this loan.
Absolutely. And we're not trying to throw Wells Fargo under the bus. They threw themselves under the bus by making this information public. So I don't have a vendetta against Wells Fargo. They just happen to come out and say, we're done. We're not doing it anymore. So,
and there is an indication that the president is going to go back to Congress. In fact, from all indications, he's doing that today and asking for more money because it's obvious that the need is really strong out there.
Okay, for the next question, what is the optimal entity to organize under as a husband and wife real estate team?
So that's a great question. This is not part of necessarily the subject that we're talking about today. I think we'll spend just a quick second on this because some of you may be interested in this, but there's a couple things that you can do. Generally, it's based on your revenue. If your revenue is $10,000 a year, there's not a lot there for us to worry about incorporating or becoming a partnership or anything like that. But the larger the revenue is, the more potential tax savings you have from incorporating. Generally in a husband and wife venture, of which I have a few, you can still report the income and expenses on a Schedule C. It's something called a qualified joint venture. The federal government allows us to file a qualified joint venture for a husband and wife duo as opposed to having to file a partnership return, which comes with its own issues potentially.
A lot of people ask about an LLC. There are benefits in an LLC because it gives you liability protection. Whether or not you really need that as a realtor is a question that only you really can answer. Now, there's going to be a cost in setting up the LLC. But there are some benefits that come. There's pros and cons, and we'd be happy to sit down with you at any point and just kind of go through pros and cons.
Yeah, absolutely.
Thank you. For the next question, can you confirm a little bit about what the 25% cap means?
Oh, sure.
So the question is really, can it be used towards business use of home? What's excluded from that?
Yeah, so we're not talking about business use of home for purposes of the use of the PPP loan. And so specifically, we're talking about commercial real estate, mortgage interest, rent, and utilities. The important part, and I'd love to have a visual for this, but again, this is all just, it's a very fluid situation, right? So I don't have the visuals of this. So you'll just have to listen to my sultry voice here for a second. When we talk about the 25% cap, what I mean is payroll must be at least 75% of what you use the PPP loan for. Okay, and so the 25% is what's left. Now you can also use the remaining 25% on payroll. All of it can be an income replacement for you as an independent contractor. All of it can. And to confirm, independent contractors can apply and receive the PPP loan. I did see that as a kind of a comment here, one confirmation, so it's an appropriate time to mention that. But of the 100% of the PPP loan that you receive, let's call it $10,000. So let's just say you receive $10,000 from the PPP loan. $7,500 of it must be the income replacement. Up to $2,500 of it could be mortgage interest, rent, and utilities of commercial real estate, meaning a business location that you have.
Yeah, but I think an example of this, I was watching a webinar last night, and the people who were putting this on work mostly with dentists. Now, as you can well imagine, dentists aren't open right now. No one wants to go to their dentist in this situation. And they were talking about how quickly do you apply for the PPP, because once you apply, you have 8 weeks basically to use the money. And so if you are a dentist and you're not going to open your office until 1st of July, because you're not paying people, you're not paying your employees, et cetera, until the 1st of July when you actually open your dental practice again, then you want to wait because you're not going to have 75% in salary in those 8-week period. So for you guys in real estate, you're still open, you're functioning, you're trying with all your might to get people to buy and sell. But it's good to look at what timing can impact not only the 75-25, but when you actually apply for the PPP loan.
So kind of an add-on to that question that just came through. So because it's an income replacement, he plans to use it on personal bills like car payments, groceries, insurance, cell phone, and insurance. Do we just have to track the payments made to the individual or keep track of all of the itemized expenses?
Yeah, so great question. Let's clarify. This is an income replacement, right? So you would have earned money during this period of time had this pandemic not been here, and so what you're doing is you're showing to the lender, basically proving to the lender that this is your average monthly net earnings. And after showing them that, that's what qualifies you for the PPP, and that money goes into your personal account to replace the income that you would have received. Generally, it's small fry stuff, but I would recommend escrowing this money in a separate account, something that has no other money in it, and so it can be very clear what you're doing. And then you can take your average monthly payroll, or again, net earnings, and take that and move that into your personal account for month 1. And then 1 month 2 comes around, take the remaining amount, not the remaining amount, sorry, that month's amount and put it into your personal account. And then when the next month comes, you take the remaining amount that, because remember, we're taking 2.5 times your monthly payroll. And so it's 1 month, then 2 months, then half a month. Does that make sense? Not that necessarily that would be absolutely required, but if you ask me how I would handle this personally, that would be above reproach. And so that's what I personally would do had I received a PPP loan, working self-employed. Not the itemized deductions of the car payment, the electricity, and all these groceries and those bills. Those aren't what qualify it. It's the income that qualifies it.
You know, if your husband, if somebody, works for IBM, no one questions what they do with their monthly salary. That's their salary. But when people who are self-employed, there's always been that concern about how do I differentiate, and we often talk about taking owner's draws and things like that to cover ongoing expenses. But what Kevin said is so extremely true. So long as you justified that this is your salary each month, what you do with it is totally irrelevant. No one cares.
Perfect. Okay, so the next question, these get a little bit more detailed into specific examples. If you are a sole proprietor and primary employee, does it go off of net income? Or, I guess that's the question, does it go off of net income? So if I have maximized my deductions, reduced my net income, what does the lender use?
Yeah, so great question. I share that question. So unfortunately, I don't have an answer for you. I can tell you that the way the bill is written is net earnings. And if we go and actually look up the definition of net earnings, then that is a bottom line profit. Okay. However, of all of the content that we have tried to, because we've read the bill, we've read everything the IRS has put out, we subscribe to tons of newsletters. We are looking at, Ward mentioned a webinar from a completely different firm. We are just consuming information as fast as we can get it. And of what we know right now, I don't have the answer for you. That would be my fallback is the bill says net earnings, and you can go to Investopedia and look up the definition of net earnings, and it will tell you that's after administrative expenses and operating expenses and cost of goods sold and payroll and everything. And what's left is what the lender would go off of. But of what we're reading, it does not sound like that's the case. So I'm conflicted, and I really don't have an answer for you, because remember, the independent contractor applications are not being accepted until Friday. So we really don't know yet at this point.
We're certainly hoping to get more guidance over the next couple of days, which would clearly define what they're looking at. But as Kevin said, we're kind of shooting in a gray area right now.
Yeah.
Thank you.
Okay.
Do you need to apply for the EIDL first and then the PPP? The EIDL is specifically mentioned on the PPP application.
If it were me, I would apply for the PPP first, which clearly defines what you're applying for, what the expenses and everything else you're applying for, and then apply for the EIDL based on what your additional expenses and are going to be.
Yeah, just remember the EIDL itself, you have to prove economic injury and all that kind of stuff. You can't use the money from, or the same expenses basically to qualify for the PPP as you do for the EIDL. And so what Ward's saying, I completely agree with. Apply for the PPP first as an independent contractor, by the way. If you are an S corporation, that may be a little bit different, but specifically for independent contractors, apply for the PPP first. Absolutely get that part knocked out. And then if you still have expenses that are not covered, that qualify under the EIDL loan, then that's where Warren's saying is you let that pick up the slack.
Okay, one more question. I switched to an S Corp in December of 2019. I filed an 1120S for $0. How do I figure out my payroll for the last 12 months? Do the commissions as a self-employed individual and the S Corp count towards for the EIDL gross revenues if I had $0 cost of goods sold?
Yes, you would have had, assuming you were in the business for longer than that. You were a sole practitioner for the first 11 months or whatever the year, and then became an S Corp. They would look at the total income that you had for that 12-month period, no matter what your form of business was, to determine what your average monthly salary would have been. Now, like I said, we don't know exactly what number they're looking for in the sense of net income, but basically, what your form of business would not be real relevant in that situation.
Yeah, and so just important to note that it's not a black and a white situation of you are an S Corp or you aren't. I mean, you were in December, but before that, if you were operating as a realtor, then that would qualify under the regular independent contracting side of things. So you're not necessarily applying as an S corporation. You're really applying for the period of time in which you were a sole proprietor.
Okay. So I saw online that there is somewhere to update my direct deposit information for the IRS if I haven't filed 18 or 19, or I didn't have direct deposit information on either of those returns. Do you know if that's a real thing? And if so, do you have a link?
Yeah, so I did hear about that, Ward. I don't know if you have specific data in that regard. I did hear about it. I'm not super familiar with it yet. And so if you reach out to us, I'm happy to get that information for you. But I actually don't have it off the top of my head right now.
They've indicated they're going to set up a database for doing that. It's hard to imagine. In talking to people when they do the returns, so many people are scared to death of the IRS having any banking information. I can't imagine having it on just a database out there. So we'll have to see how they can actually secure it from a confidentiality perspective. But they're talking about doing that exact type of situation.
And then last question that I've seen, how do I schedule a one-on-one consultation with Mullen & Associates?
Oh, great. Love that question.
Oh, yeah.
So in order to do that, obviously right now, as Ward had mentioned before, we're not taking face-to-face appointments. Our doors are closed. We are still operating. We're just operating remotely like so many people. And so in order to contact us, the last slide here, Clark, if you want to go ahead and transition to that one, is going to have our contact information there. And so you can email us at info@mullentax.com or call us. Of course, you can go onto our website and see a little bit about who we are and our team. But if you give us a call, our staff members are still answering our main lines. And so if you call 281-440-6279, a staff member of Mullen Associates, if you call during operating hours, of course, 9 a.m. to 5 p.m., they will answer the phone and accommodate you. It may be that we need to do a phone consultation. We do those very often, and so we're happy to help you. Of course, there are costs associated to working with our business. We're a for-profit company, but we help, again, hundreds of realtors. If your tax preparer has not put on a webinar such as this, if they haven't contacted you about this information, then I would say that you probably could do better. And we do better. And so we're happy to help you. We would love to work with you. We've got a ton of talented advisors, and we specialize primarily in self-employed folks. So this covers law enforcement professionals who work security extra jobs. It's really where we started, primarily working with self-employed individuals. We deal with nurses. We deal with truck drivers, with realtors, of course, small businesses. I have a submarine pilot. I mean, we got all kinds of stuff. If you are self-employed, we can help you. If you have neighbors who are self-employed, please tell them that you got great information from us, because we're happy to help. Okay. I think that's going to wrap up everything that we have today. If you would like a copy of this presentation, please email us at info@mullentax.com and request one, and we're happy to send one over to you. So it's got the slides here, but if you want the real thing, give us a call, let us know, try us out. We're happy to help.
Thank you so much.
Yep, thank you for your time, and thank you, HAR 290 leadership team, for inviting us. Marie, if you need any follow-up from us, or if you have any questions or anything else you want us to cover, let us know. We'd be happy to meet with you all again.